Things are getting weird out here. The economy is freaking everyone out. The stock market is cutting everyone's net worth in half. I'm officially working from home for who knows how long. And of course, my mom still asks why I keep wasting my time talking to a freaking camera and putting it on the internet. In an attempt to show my mom that I am not wasting my time, I'm gonna give you 6 thoughts that I have about the current economy, the stock market, a recession, hopefully help you feel more comfortable with everything going on, and maybe by the end of this, you'll leave me a comment telling me that I'm completely wrong. Plus, I make YouTube videos on investing, so it's only fitting that I comment on what the freak is going on right now. Hey, I'm Jarrad with an A, and on this channel, we talk about all things personal finance, investing, and we try to have some fun in the process. As always, check with a professional before doing anything with your money instead of listening to a guy like me who draws stick figures in his free time. Nothing in this video should be taken as financial advice. Everything that I say is for informational and entertainmental purposes only. First and foremost, just please stay safe with whatever the heck is going on right now. Always err on the side of caution and assume that you have whatever it is that's going around. Not everyone is going to show symptoms right away. Just like when you look at somebody, you can't tell right off the bat that they're absolutely crazy. But you spend a little time with them, you get to know them, and you're like, oh, you're nuts. I just didn't know it at first. You don't want to be that guy or girl that is contributing to the problem by clogging up the healthcare system because you could have stayed home away from people, but you didn't. I had a backpacking class scheduled for last week, but I decided that it would probably be a little irresponsible for me to go to that when it wasn't necessary, even though they didn't cancel it, which I thought was strange. Instead, I decided to just eat the $40 that I paid for the class and let the business keep it because it's a small business and they probably need the money more than I do at this point. As Philip DeFranco always says, don't be stupid. We're officially in a bear market because stocks are down by 20% or more from recent highs. Now, it is the first time since 2008. Are we headed for a recession? Well, there needs to be 2 consecutive quarters of economic decline, so who actually knows? We won't truly know for a few months. I could make a case for either way, so my opinion shouldn't hold much weight. But if I was a betting man, which once again, I am not, then I would guess that we're not going to be out of the woods for a little while. The economy runs smoothly when people like us are spending money and taking out debt. Now, it's going to take quite some time to recover from the effects for many different reasons. The first reason is people who have been laid off who weren't in good financial positions to begin with are going to be set back even further. Now, it's going to take time for them to get back to even and then ramp their spending back up again. The second reason is it'll take time for businesses to ramp up their normal operations. Rehiring people, getting their production going again, and getting to a point where they can sell their products since a ton of their customers have been hit financially. We're also going to see a lot of companies go out of business due to this whole thing. Number 3, it's going to take time for people to feel safe spending money on travel and going about their normal life. All of these things and much more will impact the economy as a whole. Now, I'm not trying to incite any fear, but I'm kind of looking at the current environment through an objective lens. Goldman Sachs expects GDP in the US to decline by 5% in the second quarter. And who knows, they're just kind of taking an estimated guess. It might even be more. Now, as we know, this will obviously impact future earnings. And what we know about the stock market is stock market prices are largely based on future earnings. If you haven't done it already, please Hulk smash that thumbs up button. As bad as your investments look right now, this is normal. Crashes, downturns, and recessions are all normal. No, they don't happen all the time, so they hurt just a little bit more when they do happen, but this is business as usual when you're investing in the stock market. We've been fortunate enough to have a long-running bull market, and it's caused a lot of people to completely forget about past downturns. Look at this as a wake-up call and a nice reminder that the stock market has a mind of its own, and it's going to do whatever the heck it wants. It does not care about your feelings, how much you have invested, what you invested in, or how far away you are from needing that money. Times like this are no different than any other. How it started might be unique, but the fact that it's happening is no different. One thing to know is that when a bear market hits, it usually makes stocks tank very, very quickly. Now, the recovery of those stocks usually takes some time to get back to the levels that they were at before they declined. As long as you stay patient and keep investing for the long term, then you'll be just fine. For instance, back in October of 2007, the S&P 500 hit its peak, then did nothing but go down until it eventually bottomed out in March of 2009. It wasn't until March of 2013 that the S&P got back up to the levels that it was in October of 2007. That's a recovery period of a little under 5.5 years. Right now, it's taken us about a month and a half to wipe out 3 years worth of gains. That is how quickly things can turn really, really bad. Now, how long is it going to take us to recover from this one? I have no idea, but I'm going to assume that it's going to take a little while. So when you ask me if you should invest your emergency fund, or if you should invest money that you need within 5 years, or how you can invest to make money really fast, the answer will always be no, no, and heck no. This is exactly why we don't invest money that we need in the short term or potentially need in the short term, aka with an emergency fund. Half of your money can be wiped out in the blink of an eye. On the bright side though, you can look at wiping out 3+ years worth of gains as a good thing. A second chance in case you hadn't been investing, a do-over in case you were investing with short-term intentions, or a way for you to double down on what you had already invested during that time. Do not sell your investments right now, you freaks. This is the worst time to even contemplate selling anything at this point. If you do, then you're automatically going to be taking losses on all of your investments. Always remember that paper losses are completely different than actual losses. A crash or recession isn't the time to be adjusting your portfolio or rethinking your investment strategy. We're already in it, so the best thing that you can do right now is absolutely nothing. Be as lazy as possible with selling your investments. Now, if you want to adjust it at some point, then wait for the market to recover. At that point, it would make more sense to reevaluate your risk tolerance, what you're investing in, and adjust your investments accordingly. If you feel confident with your investing strategy like I do with mine right now, and you have the money, then now might be a good time to start investing more money. Now, I've personally started increasing my investing as the market has gone down, and I also bumped up my 401k contributions as well to take advantage of what is going on. Some of you might be wondering if it makes sense to invest right now since we don't know what the future is, so for all we know, the market could go down even further. To that, I would say that no one can predict how much further it'll go down, if it even goes down. If you're just waiting around for the market to hit the bottom before it goes back up, then all you're doing is timing the market. And as we all know, no one can successfully time the market. I saw 2 articles this past week saying how this is how to tell when the market has hit its lowest point. Now, the authors try to put data and charts behind their claims, but it's all BS, so always ignore those kinds of things. When things like this are going on, it's the perfect time to learn lessons that will improve your finances in the future. I used what happened in 2008 as a lesson for myself. I saw what was happening to people losing their jobs, losing houses, and losing a lot of money in the market. I took note and I told myself that I would be prepared when the next one came around so I wouldn't be put in that kind of position. Here we are today, it's here, and I am extremely prepared. Now, going back to my previous point, crashes and recessions are normal, so I knew for a fact that another one would happen, but I just didn't know how and I didn't know when. Some things that I did between then and now is I paid off my bad debt as soon as possible. I got a stable job. I've built additional streams of income. I improved my skills, my current skills, and I've added some along the way. I purchased a very modest house, and I have lived below my means ever since. I wanted to ensure that the next time that a crash like that came around, I was in a position to profit from it. And that's what I'm doing as we speak. If you feel like you could be better prepared than you are today, then take this time to think about how you're going to set yourself up between now and when the next crash or recession happens. Don't try to change everything right now because once again, we're already in it, so all you should be worried about right now at this point is kind of stabilizing the ship and keeping your head above water. Worry about adjusting the overall plan once this is blown over and we start to recover. Now is a really good time to notice what you're thinking. thinking, how you're feeling, how you're reacting to the current events going on around you, and use this to change your actions going forward. This has been a great stress test for myself and my asset allocation. I am heavily invested in equities right now. So when there's a downturn, my investments get hit really hard. I was fully aware of this beforehand. Most people think that they can handle that sort of thing, but you don't actually know until it happens. I honestly didn't know how I would react either. I was as mentally prepared as I possibly could be, and fortunately, I've been perfectly fine and haven't panicked at all. If you are someone who isn't doing well with this current market crash, then it's going to be time for you to reevaluate how you have your money allocated. Now, it might make sense for you to hold a little bit more money in something like bonds and less than you do in equities. Once again, I wouldn't do anything about it right now, but once things have recovered just a little bit, you might want to think about if this makes sense for you. Next, you need to remove the thought from your head that someone is always going to be there to save you or your family when stuff hits the fan. What I'm really trying to say is, own your own We all need a helping hand from time to time because that's just life. But your main goal should be to make yourself self-sustainable as quickly as possible. Diversify your income so you're not completely reliant on one source. Diversify your investments. Don't assume the government or family members are going to bail you out. If they do, then great, but don't assume that it's always going to be there. The more self-reliant you are, the less you're going to be impacted by outside influences. Now, Ralph Waldo Emerson, I had trouble saying his name at first. Ralph Waldo Emerson wrote a good essay called Self-Reliance that I recommend giving a quick read. Make sure to Hulk smash that thumbs up button. Also check out the description to get 2 free stocks from Webull and 1 free stock from Robinhood. I'll also have a link to one of my favorite investing platforms, my go-to investing platform, M1 Finance. I'll also have resources and playlists down there to help you out with all of your personal finance and investing needs. Make sure to watch these videos to your left next that I picked specifically for you. I'll see you in the next one, friends. Adios.